Hello, everyone. This is 2 p.m. We are going to start. Welcome to today's webinar. Happy New Year to start. I hope you had a wonderful time at the end of 2024. I think it was much needed for many people because it was quite heavy, I would say, a lot of work. But we're happy to see you back in 2025. We wish you all the best, of course, with a lot of projects and a lot of business. And we are going to start sharp with today's webinar. Jack, please go for it.
Yes, thank you, Jean. All the best for 25. We will start with the agenda. The agenda for today is quite straightforward. We'll have a first look at 24, what happened in 24, and then we will move to 25. We will have a focus on energy transition because we have some certain points that we want to tackle today. Anyway, if you have any question during the webinar, feel free to ask them in the chat. Some of you already found that. So don't hesitate to ask them in the chat. We will address the question at the end of the webinar, but feel free to ask anything that you want at any time. Just before we start, just a quick explanation on who we are, because you may not all know us. Jean-Charles, who is with us today, created To Be First Consulting 13 years ago now, based on a need that he had when he was at the head of the oil and gas division for ABB. This strategy was quite simple and was to be involved at the FEED in order to maximize the chance to take the order once the EPC is out. To do that, he had to be aware of the projects at pre-FEED and also to be able to see beyond CapEx, have the granularity at the product package level. And that solution was not existing at that time. And apart from us, it's still not existing. So that's why we created this company. How we do that? We do that quite, let's say, a simple way. We have what we call an energy knowledge center that is divided in 3 pillars. The main one is the red one that you can see on the screen, which is called Project Smart Explorer. And this is our database of projects where we have all the information on the projects, all the market data is there, who is doing what, all the business opportunity if you are a valve manufacturer, instrumentation facturer. So we won't go into the details of product package today, else the webinar will last until the end of the day. But all the information is in a Project Smart Explorer, and all the figures that we will have today in webinars will be extracted from our own data. The second pillar, in order to make value of this data, is our expertise. We'll do a part of it today via our webinar, which is exceptionally open to public today. We also have workshops that we spend with you once a year. And then we have open ways of communication at any time during the year. If you have any question on a project, on a country, on an application, we are always here to support and to bring value to the data that we provide. We are also opening our a network of engineers, and our network engineers also explain, let's say, the industry that we have in our scope within Project Smart Explorer. So we obviously track oil and gas and petrochemical activities, because traditionally this is where we come from. And since COVID, we have this apparition of energy transition, low carbon application, depending on how it's called within your companies, that we track. That should be carbon capture, renewables, water treatment, water desalination, all the recycling activities, also the power gen. And for the last months, we are also starting to track mining and geothermal activities. We are ramping up on these activities, but always with the same, let's say, strategy, tracking projects, qualifying them from pre-FEED to late EPC, in order to drive you to your next order. After this short introduction, Jean, I will let you explain and start actually the heart of the webinar with the trends and the dynamics of what we've been achieved in 2024.
Thank you very much, Jack, for this introduction. And yes, indeed, the idea before going to the figures about project itself is to look at what they are, the element driving project. And we made a list of what happened in 2024. And the first part is, of course, about energy and the demand of energy. Because if there is a demand of energy, there is project to produce and distribute this energy, of course. And if we look overall, and you have the chart on the right of the slide, the demand for energy has grown by 5% overall just last year. And of course, it's a giant figure, it's a giant growth. And if you look at the figures on the right, you see from the bottom oil, gas, coal, nuclear, hydro, and renewable that the fossil energy is still the biggest part of our energy mix globally. But in this mix, renewable is growing, which is great for the planet. Clean energy is growing, but the problem that today, if you look at the pace of this growth in demand of energy, renewable is not able to absorb this growing demand. So of course, it means that we are still in a situation where in 2024, the demand for fossil energy has grown. And clearly, this gap between the growth of renewable and the growth of energy is not going to close down in 2025. Most likely, it will happen in 10 years. And it means that in the meantime, we still need to produce a huge volume of oil and gas and even coal to maintain the volume of energy production. So of course, what is driving behind is all type of energy project. Of course, renewable energy transition will cover it, but also a lot of projects of oil and gas and petrochem also behind, because that's where also the demand is happening. Meaning that in short words, it's not so much an energy transition, it's most likely an energy addition that we are really anticipating in our figures. The second point, which has been quite a shift during, I would say, the period 2022 and 2024 as well, are the, I would say, long-term effect of this Russia-Ukraine crisis. I took the map from the EFP training and IFP school, and maybe they are joining this webinar today. Thank them for it, where they mark the flow and they draw the flow of energy around the planet. And honestly, on the last 35 years, we have been in a world of optimizing and globalizing the energy, trying to optimize the cost, the distribution of energy. And since Russia-Ukraine, we are, I would say, back to the world of the 60s till the 90s, that maybe some of you have experienced in their career, where the energy map has to match with the political map. And of course, to go from a global energy to a sovereign energy, because that's really a kind of a security issue about the energy and quite a strategical asset if you can have. Of course, the map is not exactly the same, and the distribution system behind of energy and production system of energy behind is not exactly the same. And we are, I would say, in the long-term effect of the shift from global energy to sovereign energy. And that's something to keep in mind because it has been the case in 2024, and it will be the case for many years coming also later. One of the key aspects behind this shift from global to, I would say, sovereign is, of course, the situation of Europe, especially with the gas. And we put you here two graphs which are showing the price of gas. Here you see the curve of the spot price of natural gas over the last few years in Europe. And you see that, of course, we have absorbed the shock of demand in 2022, but still, since beginning of 2024, the price is slowly going up and a rally to better price, which are quite higher than I would say before the crisis. And why? And I think everything is explained on the graph on the right. Here you have the spot price of gas in different regions of the planet, and you can see that the price of production country of $1.4 or $3 or $2 in US or $1.3 in Canada is as a ratio from 1 to 10, almost with Europe, with Japan, with India. And clearly, what it means behind it, quite clearly, that you have such a huge gap in price between producing countries and consuming countries, which was always the case, but it was never such a gap of 1 to 6, 1 to 10 sometimes. Usually, it was more a ratio of 1 to 3, 1 to 4. And what it means behind that, it's a huge mess, not so much in the production side, not so much in the consumption side, but it's a mess in the distribution system. Okay, and we are clearly in the situation where Europe cut the supply from Russia for a big part of it, not everything, but for a big part of it. And it's quite simple idea to say, hey, Russia will supply back to Asia and the gas will be supplied from US. But in terms of logistics, it's a nightmare. Okay, and of course, we need a lot of projects of LNG tankers, of pipeline, and importing, exporting terminal of energy, trying to solve this issue and reduce the cost again. And if we look at LNG, what is quite fun is that today, really, if we look at the energy market, LNG is a little bit the derivative trying to absorb, being the buffer of all our energy system to readapt those regions. And what is quite clear from the graph here, you can see on the left, is that the volume of LNG fleet is growing to a pace that we never really anticipated before. And to be honest, all the shipyards that we know and we have discussed with are all full till the end of 2028. Of course, shipyards that are able to build either LNG carriers, tankers, etc. But they're all full till 2028, which means that we're arriving to a kind of a maximum that we can absorb the demand, even if we're trying to readapt it to our maximum. To share with you a figure as well, today Russia is exporting with what is called in the media the shadow fleet, about 5 million barrels per day of oil. They are exporting especially to Asia Pacific. Just to give you an idea in terms of fleet, before 2022, they were transporting about 1 million barrels per day. So it means that they have grown their fleet by a factor 5 just in 2 years. So you can imagine how much pressure there are on the price of tankers. And just to give you also another figure that tell us that clearly we have changed a little bit situation, that in 2024, for the first time, there were more gas transported through LNG tankers than gas transported and distributed through pipelines. So clearly we are a little bit in this situation. And what is quite funny, and maybe you have seen it during the Christmas holiday, is here the example of few energy carriers that have been, I will say, sailing since US, Texas, most likely, were supposed to go to Asia Pacific, which have drifted and rerouted themselves to go to Europe because that's where the price was better at the time. So clearly, you see how flexible they were to go from one region to another, trying to benefit from the price. So here, all this situation open the window for many midstream projects because we need to really readapt our energy system. LNG is, I will say, the first best example, but of course, it's the same exact story for oil, it's the same story for electricity, and it's a wave of investment which has started 2024 and should end in 2028. Another aspect, and I'm sure you anticipated today, is Trump getting back in office for US. And I took this picture with the background. You can see maybe a drill, baby drill, which I think is quite transparent of his strategy over energy. Like it or not, Trump is quite easy to read in terms of strategy because he says what he's doing and he does more or less what he is saying as well, which for analysts like us is quite transparent. And his two decisions which should be clear is that he's going to reauthorize all the oil gas project permit, especially the one that Biden stopped after 2028, where the permits were frozen. I'm not sure it will be enough for those projects to really live up and go in execution because today US export capacity is going to a point where it's hard to find market to absorb this volume of exportation. But of course, it will kind of push those projects back in dynamics. And his second decision would be to close all the project on Inflation Reduction Act, especially on energy transition. So all the projects which are not financed yet, let's be clear, maybe some of them will have hard time, especially all the windmill project, which seems to be quite a big target for Trump. To be honest, then outside of those two short-term impact, the US LNG strategy will not change. Trump and Biden were quite clear and quite aligned into their strategy of exportation and use LNG as kind of a bargaining power with a lot of countries. Maybe Trump will be sharper than Biden, but at the end, it's exactly the same story. And as European, I think it will be quite a big push because today US provide 40% of the Europe LNG need, but there is still 20% of Europe LNG which is arriving from Russia. And Trump made it quite clear that they say, okay, you close the tap with Russian LNG and you buy everything from US. From all the political announcements that we have seen in Europe, it seems that they will follow this lead of US. So of course, it means that you need again to readapt, be able to have the terminals ready, etc., etc. And it means that the Russian gas will have to go somewhere else. So again, some impact that we start to see arrive in 2025 quite quickly, and most likely it will drive project as well. One point which has been quite important, and maybe it's a little bit overlooked, is the situation of China. My title on this slide is a little bit, I would say, too much because I may need economic crisis in China. When I say an economic crisis in China, it means that they have gone from a 10% increase in terms of economy to a 5%. Which in France or Europe would be great, clearly. But for China, it means it's a little bit a problem, especially for petrochem project. Because all the last few years, a lot of projects of petrochem with huge capacity have been, I would say, awarded and going to execution now. And the problem that those projects were planning for the petrochem demand to grow like the economy by 10% every year. And the problem that as soon as the economy slowed down in China, of course, the increase in demand for petrochem products slowed down as well. And which means that all the project of refineries that we have seen being going to completion on the last 3-4 years are arriving on the market where they're already in overcapacity. And for the first time, China is going to close down the petrochem asset, the refinery in Dalian, for many reasons, but mostly because today, I mean, they are in overcapacity. And if you look at the figures, and maybe you have seen our post on LinkedIn, it's the first time in our database that China is slowing down in terms of capex being awarded. 2024 was already a slowdown, but 2023 was already starting to go down, and we see that not picking up again. At least it should slow down again in 2025. Maybe then it will restart to grow, but let's be clear, let's see how it's going. This slowdown in China will, of course, stop down all the projects of petrochem that were supposed to happen, because all those projects, if they go to final investment decision and completion, will lose money. So clearly, those projects are postponed, and it means that, at the opposite, other countries in Asia Pacific will take this leadership on project, because if you look at India, if you look at Indonesia, Malaysia, the demand is still growing, so project will still happen there. So it's quite interesting. Maybe the leadership of Asia Pacific will transfer from China to other countries. The last part, which is quite important today on the market, is clearly the engineering bottleneck. If you look at, and I put the list on the left, it's not super sexy, but at least it's efficient. You have the backlog of all the main EPCs company, and most of them are at their record level. Okay, clearly they are running full gas today. And what we see on the market, and if you're familiar with our webinars, we have been predicting this effect for quite a few months, if not years now, where the engineering companies are starting to be the buffer of the operator appetite, where operators are bringing more and more projects to the market, and engineering companies are, I would say, being awarded more and more in advance, and also bidding on less and less projects because they have just too much on their plate. To the point where in 2024, majority of the projects were awarded without EPC tender, meaning it was a FEED contract converted to EPC contract to the exact same companies. And we're also starting to see new, I would say, agreements between operators and EPC. Aramco signed an agreement of engineering hours of about 1 million hours of engineering with Wood. BB made it with KBR just last week. And ExxonMobil has done also a partnership with SBM about FPSO. So clearly there is today a bottleneck into the engineering companies, and operators are starting to fight a little bit to find companies to execute their project. Those tensions, they are not only in the engineering companies, they are a little bit in every ways in a supply chain, especially if you look at long lead items like compressors, transformers, power unit, where you can have lead time sometime to get your equipment for a project of 3 years, which of course is quite a problem to manage to have the project ready on time. It is going to remain, most likely, because of what Jack is going to show you about projects which have been awarded in 2024.
Thank you, Jean, for this context and this environment. Let's start to look at the figures for 2024. We know that, let's say, globally in the industry, it has been sometimes a tough year, especially thinking about the automotive business. But for energy, it's another story. It's going up since the exit of the COVID. Year on year, the level of business being awarded is increasing to a point where we don't know where it can stop, despite this having this bottleneck. Quick explanation for those who don't know, let's say, our color code. In red, you can see the petrochemical business. In blue, the oil and gas. And in green is the energy transition business. So first thing first, 2024 is a record year, all time ever. And we can always see that the backlog for 2025 is extremely high. So we are, let's say, in good position to have a good forecast for 25, but I leave that to Jean. Second information is that the blue part, which is the investment of oil and gas, is quite steady year on year. So despite what we heard on the news, we still need oil and gas, and still a lot of investment is done on oil and gas. Petrochemical on the opposite is slightly going down for several reasons. One of the main reasons is what Jean explained on China, that is going some difficulties in petrochem. There is also the effect that when you open a refinery or a cracker, you will have this asset for a long time after you declare to be carbon neutral. So you have a carbon footprint issue. So most of the projects are going to be redesigned. So petrochem should be going up in the next years. Finally, you can see here the energy transition, and should be an energy addition, because it really comes on top of all this business. And now the energy transition is almost at the level of oil and gas in terms of what has been awarded. We notice a slight, let's say, transfer from petrochem to energy transition, especially with some projects that I have in head who have full revamp of petrochem complex going to e-fuel, green ammonia, green hydrogen, and all this application. But it's not only explaining the slide in petrochem. If we look at the first here chart on this graph, it's again similar, but put in perspective really that energy transition is not something that we can, let's say, ignore anymore. In 2024, it has been already almost as big as the oil and gas in terms of business being awarded. So you can't put aside this business anymore. Looking further in the region, we can see that the number of region dominating is Middle East. Also because Middle East has been awarded a lot of big projects in Saudi Arabia and Qatar. So when these huge projects are moving forward and being awarded, it's not a baby step, it's a giant step. Okay. Then after Middle East, we have Europe, Asia, and North America that are following. Just a word on, let's say, on North America. Let's say the second half of 2024 has been quite slow, and most probably, let's say, side effect from the presidential election that has been in US. So waiting for some event and some announcement. Most probably in 2025, this will go up again. If we go now, let's say, go a level further in terms of granularity and try to cut each of these energy by region, we have three graphs and three different stories. First one, it's something that you will feel, the oil and gas, it's happening in Middle East, but it's happening massively in Middle East. I mean, in terms of business being awarded for 2024, Middle East is leading by head and shoulders. Half of the business has been in oil and gas has been happening in Middle East, followed then by North America, especially with some LNG over there. If you look at, let's say, petrochemical and refining products, you have a complete different story where you have Asia Pacific leading, then followed by Middle East, but for two different reasons. Asia needs refined product for its own needs, for its local population. We know that there is a direct link between the consumption of refined products and the increase of inhabitants on one side, and second, from the increase, let's say, of the quality of life. So that's why they need over there refined products. Middle East is investing in petrochemical, not for its local demand, but to create value on the raw material they have and to sell refined products on top of the raw material of oil and gas. Finally, energy transition is mostly happening in Europe, pushed of course, by governmental subsidies. And actually, it's so strong that if you look at the business in Europe, you have 90% of the business happening in energy transition. So that's why they have a huge share here, followed by North America, Asia, and then Middle East, again, for different reasons, some more linked to water and green electricity. Last slide before moving to 2025, who is doing what? And here in this graph, we have three colors and three acronyms, so I will explain. The blue part is the IOCs, standing for International Oil Company, BP, Shell, Chevron, all the big boys that we all know. The red part, who is actually leading the game, are the National Oil Company, Aramco, ADNOC, and all these players. And finally, in green, the independent operators. First thing that NOCs are leading the game. This is also to put in perspective with what I explained before on the Middle East taking the lead. Big projects in Middle East are done by Saudi Aramco, are done by their local national oil company. That's why they're also taking the lead in terms of operator profile. Then are following the independent operators. And independent operators, you have various types. You have historical ones like BASF, Air Liquide, to actually new ones like LanzaJet or CIP in this list. And these companies are usually doing smaller projects. You can see that the average size of the projects for an NOC and IOC, it's above $1 billion. But for this independent, they are doing smaller projects way below this $1 billion US. But these projects are actually moving fast and are quite a lot of them. And most of these independent companies also are not doing 10 projects at a time. They are doing one, sometimes two projects, but one after the other. Last word on the IOCs before moving to 2025. The IOCs are, let's say, the public face of oil and gas. But you can see in this chart that they are not let's say, the major part of the business. They are actually a small fraction of the business in energy, to be also mitigated by the fact they are taking more and more joint venture with national oil companies on big projects, but they are not leading the game as we can read, let's say, in the newspaper. Now let's jump to 2025, and for this first forecast and the outlook on the coming years, Jean, I'll let you the floor again.
Thank you very much, Jack, and thank you for this picture, which was all the project awarded in 2024. And now let's look at what is also coming. What is quite clear, if we look back at this profile of investment by CapEx, is that 2024 was a record year, but what is in the forecast for 2025 is massive. The first reason behind that, the long-term demand for energy is still growing, and of course, it drives a lot of projects. Behind the three, I would say, colors, petrochem in red, oil and gas in blue, and energy transition, you find different, I would say, drivers. For oil and gas, clearly the demand is still growing, not so much in developed countries, but really a lot into developing countries to develop, I would say, their economy, to develop their standard of life, etc., etc. So it's quite clear that this will maintain over time. Energy transition is still skyrocketing, and you can see the gap between 2024 and 2025, where it's almost double, which is completely massive. I mean, we are talking about hundreds of billions at the end of the day. And you have some countries like inside those demand, which are still driving quite efficiently. US, Japan, India are still benefiting from a huge economic stimulus, which are going in effect now. So the forecast for 2025 is pretty strong, I would say, to say the least. Not everything will materialize. Clearly, it will not fit into the pipeline. Nobody in the value chain can deliver this amount of projects. So it means that a lot of projects will be postponed, not so much because I would say they are not beneficial, because people are losing money or they are bad projects, but simply by the fact that we cannot do all those projects in the meantime. So it means that about 20 to most likely 30% of those projects will be postponed to the following year. And you see that here the forecast for 2026 is already pretty big as well. So it means that the project will have kind of a waterfall effect on the coming years, to the point where we estimate that from today's perspective, the pipeline is already full till 2029. So we're starting a period where all our industry is going to run full gas, and we'll have more projects than we can execute. Of course, it's really great for business-wise, but it means that it will be full of trap as well, because projects that you have been starting to trace and were supposed to happen because they were good projects will be postponed because they are missing this and that. So for you, it could be quite a trap. So that's tricky, but overall, it's really a good situation. If you look at the split and the same graph that Jack was saying, but if we look at the future, 2025 should be the first year where energy transition overall will be overpassing oil and gas in terms of capex being awarded. So it's quite massive. It's a big news. Energy transition is a broad, I would say, category because it goes from renewable to, I would say, recycling of plastic, but it really shows how much our energy world is evolving, not so much in a revolution, but clearly more likely like an addition. Okay, petrochem is still there, oil and gas is still there. It's not because oil and gas and petrochem is slowing down, it's just by simple effect of energy transition growing. In terms of continents, while we had, I would say in 2024, Middle East dominating, it should not be so much the case in 2025 because there is not, I would say, in the reservoir so much a giant project, even if we may have surprise, especially if they start a price war. But most likely, Asia Pacific will reclaim its lead on the market. But you see, the situation is really more balanced between North America and Europe as well. Africa has a strong forecast and had a strong forecast also last year, but in terms of delivery, still quite complex. As you, for those specialists in chat, you know how it works. I mean, we know when the project starts. It's hard to know when the project will go to execution because of political instabilities, which are still happening, unfortunately, in the region. All the region overall are investing, to be honest, in every energy project. One point about South America that we did not discuss will only depend on, to be honest, Brazil, Suriname, and Guyana with FPSO project. The rest is pretty shy, I would say. Maybe some mining project, but really it will remain marginal, clearly. If we look at the split of those regions per application, you see that oil and gas, there is a super strong ambition with Africa, even if I would say I would be caution about those markets. But behind North America and Asia Pacific will drive the job. Middle East, I would say they will maybe sit down a little bit and capitalize on all the announcements they made in 2024. And what is quite funny that all the effort they made in oil and gas, you can see it coming also in refinery and petrochem. Because quite quickly, I mean, when you invest in upstream, then you need to invest in downstream. And that's what we see if we look at the second graph, refining and petrochem, where Middle East has grown its share massively. But of course, Asian countries remain, I would say, the big boy there. But the market is quite binary between Middle East and Asia Pacific. For energy transition, Europe stays at the lead, clearly driven mostly by decarbonization project and recycling. And what is quite funny is to see the part of North America already shrinking following Trump election, which is going in effect quite quickly, even before he enters the office. But the perspectives are getting slimmer about energy transition in the country, even if a lot of, especially oil and gas companies, will still proceed with their project, trying to maintain, I would say, their reduction pledge of carbon footprint. Last slide about, I would say, the market is a profile of operators. You see the gap is a little bit more balancing than what it was in 2024. Even if NOCs remain at the first place, they won't be at 55 or 56%, will be at 46, which is quite massive when you think about it, but just a little bit less. And in fact, the biggest push will come from the IOCs, so from the international company, that will increase their volume of investment. To be honest, a lot of IOCs, especially in Europe, were quite shy after COVID to make investment in oil and gas. I would say a lot of their strategy was to go to energy transition fully, but now they are back to oil and gas quite aggressively if we look at BP or Shell, for example. And of course, that's why they reclaim a huge market share on the market. Independents are still there. We see them really taking a huge lead in energy transition and becoming kind of game changers on the market because we're starting to see emerge quite a champion in those independent category, usually into their vertical, one type of application or one country. Both those companies are getting a huge momentum with size, which are starting to be quite important. Jack, I give you the floor for energy transition and to follow up on this topic.
Yes, so, some let's say subject we want to tackle today on energy transition. The first one we wanted to share the graph on the market curve. This market curve is not linked to energy transition. It's let's say a usual one that most of you know. But just to explain that energy transition is actually following this curve, and now we are entering the phase of the facing reality. Okay, so for the last years it was all marvelous. Okay, it was a hype cycle. Everything was going to be hydrogen. We had a lot of announcement. It was also emphasized by the fact that it started after COVID, where money was free, let's say. So a lot of startups have been created. A lot of startups have been funded with some ideas sometimes maybe considered as a bit crazy or utopic, let's say. And if you remember a couple of years ago, we have been explained that today we will be driving hydrogen cars and we were this close to have hydrogen planes. Okay, the reality is completely different. Now we are entering a phase that we have the let's say the hard reality, the industrial reality that we need to face, and this will imply several things. First, it will streamline the number of ideas and technologies. Okay, for example, all these EV planes or let's say hydrogen planes, it's not going to happen now. Maybe it's better to have a plane running on the sustainable aviation fuel, for example. We can always debate that it's not an ideal solution, maybe, but it's working today. So the number of technology will streamline. Then the number of actors, obviously, will also streamline, meaning that for, again, sustainable aviation fuel or alternative fuel, we don't need 50 licenses. We only need a few. So a lot of company will disappear, and tomorrow we will have some champion that will emerge. Okay, but that's normal in an industrial world. The industry, it's not Amazon.com. Amazon, you want it, you click it, you get it. In the industry, you have a pilot, phase 1, phase 2, and so on. And every time you also have technical challenges. Okay, so what we have been announced also on green hydrogen to be above the gigawatt by next year, it's not going to happen. We still need to work on that. And also for you as a manufacturer, you also have in this phase where now we are, let's say, hitting the reality, something that is quite, let's say, unique in the green hydrogen, that you have a lot of announcement and less projects being announced. We've been saying that for years. So for once, we took somebody else's figures and not ours. And that's from McKinsey. So McKinsey said exactly what we've been saying on the 100 projects being announced in green hydrogen, especially in Europe. Around 5 to 7 will actually see the light, and the rest will never happen. And if you look today still at the European list for projects for next year, you still have 1,100 projects for next year. It's not going to happen. It's just not possible. So that's why also we work a lot to have a database that is qualitative. There's no need to put you 1,000 projects, but rather already to identify the 50, 70 projects that will happen next year in energy transition and in green hydrogen. So a lot of things they are happening, and for you as a manufacturer, it's also a key moment to start to identify via Project Smart Explorer who will be the champion of tomorrow. Start to work now, so when the liftoff will come in a couple of years or 2028, you will be part of this success. One word on carbon storage, because that's, I guess, one of the biggest problematic that you already have on your desk. And if it's not on your desk, it will probably come in the coming months. We have here, let's say, 2 factors that are posing problem in carbon storage. The first one is exactly what I said before, streamline of technology. Putting the CO2 and putting it on the ground, it's considering that CO2 is a waste, so you just bury it. Taking this CO2 and making it fuels out of it, SAF, whatever you want, is considering CO2 as a raw material that you can monetize of it. We know that we have, let's say, legislative issue, especially on how to count the CO2. I'm not going into these details today, but I want also to explain the second problem that we are, and this when it comes on the CFO and his decision. If you look at the cost structure of a carbon storage project, you have all the engineering cost and the development. That's the usual. Then you have the operating cost, the cost of transporting your CO2, which is, let's say, can be, it's minor, but still a cost there. But really the big problems comes at the closure. When you close the well, you still need to monitor this well for at least 20 years to be sure that you have no leakage, meaning that for a CFO, he'll still have to have for 20 years to pay for the CO2 that he put years ago. So it's not agreed on that. And on top of that, the second blade comes with this perpetual liability fund. So a company will need to put every year ad vitam aeternam money on a fund that will take care of a well if a problem is happening, if a well is leaking. This for a CFO is just not acceptable. He can't accept to have on his balance sheet cost year on year with no end. He can't accept that. So he'd rather pay more and transform his CO2 into e-fuel and then get rid completely on his balance sheet, the CO2 and the cost, rather than have something that he pays year on years. So that's why these big projects in carbon storage are so far not moving. It's mostly because of this, let's say, two reasons, mostly because of this cost structure reason. Before going to the conclusion and our Q&A, so you can ask any question that you want, I just wanted also to share with you the growth of energy transition. On top, you have the forecast, and by forecast, I mean actually the project that we have visibility on, that we qualify. There is no formula of Excel behind to make any forecast. It's purely backed by all the project that we know. And you see the growth is more or less an exponential growth. Below, you have the actual growth, actually the awarded business that is more linear. But I will repeat again what I said before, sorry, but it's not a business that you can't put aside. 2024 is already 120 billions, and 2025, we are on the 16th of Jan, is already more business being awarded next year than this year. We didn't have started even the year. Keep in mind, as a reminder, that before COVID, before all these new applications were not existing, a normal year was around 350 to 180 billion US dollar being awarded. And here we are talking about 140 for 2025 already blocked. So you can't put this aside. Leaving this job aside is not an enlightened decision. And final word, and James Jean, you will have the conclusion. All this business is moving to our, let's say, modular and licensing business, where you can choose the bricks that you need on the side. If you need an electrification, if you need to capture the carbon, if you need to add hydrogen to recycle, to do fuel, it's bricks that you take here and there, and it's basically the same. Capturing carbon on a steel plant, whether it's in the north of France or the south of Brazil, it's exactly the same. So that's why it's really important to understand that and to track these projects as they should be in order for you to ensure a bright future.
Thank you very much, Jack, for this part on energy transition. And before going to the conclusion, I would like to tell you that you can start to ask your question in the chat. Usually it takes some time for us to, I would say, receive those questions. So please start asking there so we can see them. For the conclusion, it's quite clear that 2024 appears as a record year in terms of investment and number of projects, both clearly. And most likely this momentum, because it was already the case in 2023, is going to, I would say, pursue in 2025 and go in the same way because the demand of energy is still robust on the long run. On top of, I would say, the projects which are motivated by this energy demand. You have a lot of projects which are, I would say, answers to the political turmoil or political crises, which are redesigning the map of energy distribution between the continent, between the country. And in this game, US still lead oil and gas, but Africa is growing despite the problematic. Is growing more and more to be, I would say, in a game, while the Middle East is, of course, still remaining at a massive volume, especially in oil and gas, mastering the market. Asia Pacific still continue to focus mostly on downstream activities, not only petrochem, but also chemical application, while we see Europe mostly starting to be quite on a dominant page in energy transition and quite upfront compared to US. And we start really to see the region concentrating on one aspect of, I would say, energy need that they have. Today, in energy transition, and as Jack mentioned, a lot of projects are being announced, but overall, most of them are getting postponed and cancelled, especially if you look at renewable or green hydrogen, for example, or carbon storage. But overall, this market is still booming. The reality is that what has been awarded is still a massive volume, and we're talking about 100 million US dollar every year. And here you have, I would say, a kind of a gold rush of new players, new companies, new operators, but also new engineering companies, which are developing competitive processes, a great solution that we never thought about, which are able to create value in two ways. Can be create energy at a cheaper price, but create value also through decarbonation or recycling. So it's quite interesting to see developing. It's a lot of new processes, really technical issues. And behind, we are still questioning about the final investment decision that we can rely on, because clearly most of the engineering companies are starting to be underwater, and that's what is clearly today slowing down the market in terms of volume, plus a few there and there some also key equipment for the project. So it's going to remain there because the engineering capacity is not going to double tomorrow, of course, but it means that you need to play quite smart on the project, really select the one that will be executed on time, which can be quite tricky because today, if you look at the market, you receive more quotation, requests of quotation than you will ever be able to quote. But the idea will be really to focus your time and your resources on the project where you're, I would say, most likely to get an order. And that's where the trick is starting to be, not so much get quotation, but get the order behind. And that's where we can help you. Thank you very much for coming to this webinar. Now we're at the end of the presentation. If you're interested, we always publish almost every week some posts on our LinkedIn